In this tutorial of the perfect momentum strategy, we're going to go over the stop loss options. And let's scroll down to those. They're about 2/3 of the way down. Okay. So if you want to use a stop loss in your strategy, which I always recommend to do as part of risk management, first thing you're going to do is show stop level. And your stop loss is, if you want to change the color of it or how it looks, it's controlled by this style. That's going to be your color, and you can choose different style settings for it: the color, length of the line, how thick it is, etc. Now, going down to the stop loss section, if you want to use a standard fixed stop loss, say a fixed percent, let's just, for example, use a 15% stop loss, just an example. You will now see that come up on the screen. So now this yellow line, which again, if you want to change the look of it, can be done here. But let's just use yellow for now. It looks pretty nice on the screen. So now you can see that from this entry right here, we are 15% as a stop loss. Let's go back to it. Okay, so you can change that by any percent. It can be to the 100th percent if you wanted to. Let's say you wanted to go like really small. You could do that. So you'll see this now. You'll definitely get stopped out on this, but you'll see that your stop loss got moved down there. And you can also use ticks or pips. Ticks if you're trading stocks. That can be a dollar amount, or pips if you're trading Forex. Now, if you don't want to use a fixed stop loss percent or a number, fixed number, you can use an average true range. And you can select it so many different ways. So right now we're trading on an hour time frame, but if you wanted to use a different time frame, say like a daily time frame, you could do that. And let's say we are going to do that right now. We're going to use average true range, looking at the daily time frame, even though we're on the hour chart. We're going to look back for a period of 20 days, and we're going to use a multiple of 2. So here, we're now using that type of stop loss. If we were to change it to an hour, it would be quite a bit less. Let's see where that moves up to now. There we go. And this can also be adjusted to the 100th percent also, if you like. You could use, these are your two stop loss options. You use either fixed stop loss or an average true range stop loss. Now, once you're in a stop, and say you want to move your stop loss to break even as soon as you get into profit, you can do that with this setting here. Okay, we have our stop. So let's show you that. Let's show you an example. Okay. So there we go. Let's look at it a little closer. Let's find an example where it worked well. Here's a good example. So here, our stop loss, we started at 15%. Let's go down to the stop loss section again. So here's our initial stop loss down here. Now, as soon as the candle closes, the bar closes, and we get into profit, it now moves our stop loss to break even. If you want to have your initial stop loss at break even, as soon as you enter the trade before the candle closes, you can use this initial stop at break even, and it will do that. If you want to use a trailing stop of a fixed percent, you can do that. So let's actually change this maybe to like a smaller number so you can see how it looks on the chart. So we have our initial stop loss of 15%, and then as soon as price starts moving, we start trailing. Here you can see it very simply right here. So we got 15%, price started going up, we start trailing right here by 5%. And if you don't want to use, oh, by the way, this is adjustable by the 100th percent also. You can type in any decimal to the 100th. You can also use ticks or pips on this trailing stop. Now, if you don't want to use a fixed stop loss, you can also use average true range for your trailing stop. You can see that up here on the chart right now. Here's an example where we start trailing. And you can change the time frame on that also if you want to use a different time frame, maybe like the daily chart or whatever else. And then the last option for stop loss you have is a Connors RSI stop loss. So if you want to use the Connors RSI as a stop loss, it can be very dynamic and adaptable to market conditions. You can use that also. And you could use the Connors RSI stop loss with any other stop loss setting up here. So you could have an average true range stop loss and average range trailing stop loss with a initial stop loss with a fixed percent, and that's fine. Now, what you can't do is you can't use average true range stop loss and stop loss together. They just cancel each other out because it's one or the other. But once you have one of these options, whether it's average true range or use stop loss, you can use either trailing stop with a fixed percent or average true range. Doesn't matter. You can use both of these. Well, you can't use both of these together, but you could use either of these with either of these initial stops. So same thing for down here. You can't use average true range and trailing stop percent with each other. They cancel each other out because they're just different ways of measuring your trailing stop. But you can use Connors RSI initial stop with any of these options. And what will happen is the first time your criteria for stop loss gets triggered is where you'll be exited at. So that is it for stop losses. Hopefully that helped. If you have any questions, always just send us a message. And thanks for watching. Take care.